just a bit of my HMO education here. I'm just going to talk about property debt. Now, in the Punjabi community that I'm from, and I think there's probably going to be a lot of amateur buy-to-let, and I don't mean that offensive, buy-to-let investors that are on repayment mortgages. Now, this is the minority mindset, right? The immigrant mindset that we had, and it's the thing that my parents would have done. It's the thing that most people are focused on. Let's just get that capital that you're borrowing repaid, that mortgage repaid. Well, just going to talk to you a little bit about why mortgage debt can be a good thing, and something that a lot of people don't think about. So let me ask you a question, bro. If you got £100,000 in the bank today, in 10 years time, I'm assuming there's no interest, you're just going to leave it in the bank, £100,000 in 10 years time, what is that going to be worth? I'm guessing you're going to be saying something between sort of 80, 90k, right? That's probably what you're thinking. The government target for inflation is 2%. So that means 2% every single year. So if they hit that target, this is what they intend to do. So you fully expect they will hit that target at a minimum. Obviously, it's been a lot higher recently. If they hit 2% inflation for the next 10 years, your money, the real value of that 100k will be 83k. You're going to just see 17% wiped off that money. You can apply the exact same concept to debt. So if you've got £100,000 worth of debt and you just leave it sat there for 10 years, well, the number will still be £100,000, but the real value of that debt will actually be at least 17% lower in 10 years time, and you probably think it's a lot more. So that is why property debt is a good thing. And right, so I just spoke about debt. Now I'm going to talk about property prices. That hopefully should be the easy part, right? Let me chuck up a chart because I like to geek out and it makes things a little bit simpler. So first, property prices. What have property prices done in the UK over the last 100 years or so, or since records began? Well, basically they tend to double every 10.5 years or so. In the last 10 years, that's been a little bit different. They went up 73%. So a little bit slower, but still property prices in the UK tend to go up, right? We've got a growing population and there's no more land being created. So that creates a supply demand imbalance. Property prices tend to go up as a result. So if we take an average 2-bedroom home in West London, which is where I'm from, average that's about 300k, right? Obviously you can get lower, you can get higher, but on average that's about 300k. If we use that as an example here of what would happen if we bought that today, and then what that would look like in 10 years time, well, 300k based on a 73% property price growth would turn into 519k, as you can see on the chart. So you're going to get 219k in equity growth, right? If what's happened in the last 10 years happens again in the next 10 years, pretty likely, probably better. So then when you flip to the right hand side of the chart, and remember that example I gave, £100,000 in the bank or £100,000 of debt, what would happen to it in 10 years if the Bank of England hit their interest rate targets? It'll go down about 17%. So if you apply that 17% to what your mortgage would be on a £300,000 home, well, your debt is then going to erode by about 38k. So 38k debt erosion, 219k property price growth or equity in your property. Smash those two numbers together, you're looking at about £250,000 benefit over 10 years on one 2-bedroom bog standard property by doing absolutely nothing. That doesn't include any rental income or the rental profits you would see over that 10-year period. This is why I think property is a brilliant place to put your money. It's a way to build long-term wealth. We're doing really creative deals where you add value and you try and pour as much of your money out as possible and you get fantastic returns on investment. Thanks for watching.